Mic check, please. All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 18th, 2022. Let's see where. All right, I want to start with. I'm going to start adding the 150-day look back. I think it's important that we start putting some of that longer-term sniper look back into context. So I'm going to just walk us through that once for the first time. All right, so this is the S&P. This is on daily charts, and this is today. This is the sell-off from the highest high. So we are at minus 10.7% off the top. This was down at one point minus 22% into bearish territory. So I'm drawing support levels. These purple lines are my target. That's the color we use for targeting. This intermediate high is really kind of the same as that one, and that's where the collapse occurred. So 460 is important. 480 is important. This intermediate bump at 440 is important. So there's something important about those $20 steps. You could even look at 420 as a $20 step and 400 as a pretty important price level. So there's something important about those, and those are like 5% ladders between 400 to 420. So those are probably psychological and round number factors. So this maroon box, here's the 0-day. Here's today's price. This little box is today's range. We'll see that a little more closely when we zoom in here in a minute. But this is your 150-day look back. So right here was the 150-day high. This is a 30-day look back right here. So that's that, the 30-day look back on the sniper, minus 30, and then we're interested, of course, in the size of the range. Then these previous 30-day chunks, just as a point of reference. I like seeing 30-day chunks at a time. By the same token, I then take that 30-day look back, and then I'm interested in the 3 10-day periods, because those are like little swing trades. So I have those 3 10-day boxes, and then the 10-day box I build into a 5-day look back, and then the 1-day look back. So really, inside this 30-day look back, there are 6 5-day chunks. If I were to divide that further, we'd see 6 5-day chunks, and 6 and 6 and 6 and 6. So in that 150-day look back, there are 30 5-day looks. And so when we're computing the relative 5-day volatility of the sniper move, what we're really doing is we're measuring the percentage of price from low to the high for that 5-day percentage. High minus low divided by price. That gives us a percentage. And so we're really looking at 30 periods, and then that gives us the 30 data points that we need to produce a statistical description. And then what we do is we take a look at, of those 30 points, we look at max and min, average, and then plus or minus 1 SD. So plus 1, plus 2, and then however high the max is. And that gives us a z-score scale in which to appreciate how volatile the last 5 days have been, given the 5-day volatilities of the past 150 days. And by the same token, we take the 1-day price and we look at the last 150 days and we say, what was the maximum 1 day, minimum 1 day, average, plus or minus 1? And that gives us a z-score of how big the 1 day move is. Because what I'd really like to see is something where the 5-day range is small, but the 1 day range was large, because this range compression just broke to the upside like a coiled spring taken off. So when we look at the sniper report and we see quiet 5-day, large 1 day, that gives us an alert that something new is happening. By the same token, when we see something where there was a strong move, say from the bottom of the 150-day range up into here, that's a really strong move. And this thing, if you scored that equal to 100 and 0 and put that into 100 equal parts, this has now fought its way back to about the 60-yard line. So it's moved that far off the bat. So when we're looking for patterns like Godzilla, for example, we were getting a lot of Godzilla moves and setups down in here because we were at the bottom of the 150-day range and the bottom of the 30-day range and the bottom of the 10-day range, and we had large volatility, and that led to recovery moves where Godzilla was just enraged. Well, we're not seeing Godzilla patterns anymore because he's had his run. But what we're seeing are a lot of fence sitters where they are exactly in the middle of this 150-day range. They're in this tight band in the middle. And then from here, there's a nice breakout possible to the top or back to the bottom of the range. And so if we can put a nice tight bracket around that, then we get a favorable reward to risk just on a breakout from the middle to either extreme. So it doesn't have to get out of the look-back period for that to be a great move. We could set our risk equal to here, and look, there's 1, 2, 3 just to the top of the stack or the bottom of the stack. So that's the argument for the 10-day, the 30-day, and the 150-day look-backs, and then using the 5-day volatility to give us a sense of the emotional condition of the traders. The 10, 30, and 150-day are giving us analytical trade locations within that 0 to 100 scale of each time period. So location in that sense. And then the 5-day and the 1 day is giving us the emotional response to the volatility. The combination of location and volatility statistics allow us to find favorable patterns where more of these different look-back demographics might be interested in strong moves in either direction. That's what we mean by a compound critical state. So having said all that, when I'm looking at this 150-day, I notice how the Kata 2s would be working inside here. That's the argument for why Kata 2s are worth giving a try to. And I want you to notice the power of the PSAR to indicate these directional moves and the length of the trends that we get based on the way we are computing the PSAR. That's an important part of our strategies. And then notice how smoothly the RL10 describes price, and so you don't have to worry about the price spikes, which feels like noise, and you can find those key turning points in the RL10 and use that as a way to start bracketing your trades. I notice that we've had one leg up, probably two legs up. The third leg up, which is kind of stalling, which puts this into a nice range compression. And now notice the breakout from here can get to 440 back to test this price level, or it can break down to this price level, which is the peak of the dragon and the peak of the RL30. So there's a nice move in either direction, breaking out from this range compression. That feels like a market that is in fence sitter conditions. And you'll see a lot of symbols that have worked their way off the bottom and now are up in the middle of their range. And this is the time that they're going to pause and say, is there another leg up, or is it time to start preserving the moves, which leads to some selling pressure? Well, we'll see. But I wanted you to see where we are in that 150-day look back. This little 2-day consolidation and compressing range, you can see is setting up like a little nice breakout box in either direction. So if that's what the 150 looks like, we can now zoom in on the 30, and now we're going to see the same thing. Here's our, it's a little easier to see now. Here is today's range. That's this box. So, and here's where the close was at 428. So this breakout, we would program to look at 441. It has to get above the 10-day high and has to get through the Z2 to get to that. But that's a small range risk, and 1, 2, 3 are to the upside. And then were it to break out of that and get through the spine of the dragon, the 5-day low, the skin of the dragon, back into the river, it could get down here to 418. And so now you have a nice 1, 2R move, 3R if you go all the way to this support level at 414. So this is shaping up to be a nice compound critical state, equidistant between two well-established support and resistance levels. And after the nice move of these 5 days, the last 5 days have kind of been in stasis, in the same way that this stasis led to that move up, consolidation, move up, 1, 2, 3. So this would be like the fourth leg up if that stair step keeps going. We're noticing how smoothly the PSAR has just been telling us where the direction of the trend is, and how good the belly of the dragon is, the lower skin of the dragon, as a trailing stop. That little guy has kept you in the position the whole way. And then this is typical of an upward move where price stays between Z1 and Z2 kind of all the way up, and it slowly drags the river up with it. If we zoom in and take a look at the 30-minute chart, now what we're looking on this one is with the 30-minute chart, we have, here's our 5-day look. Here's the 10-day look. So there's your 5-day range. Here's your 10-day low. These are that previous RL10 and dragon resistance, which when they broke allowed a price to expand to the upside with rising lows until this broke, and that's where we talked about having strong stops in that region. Now today, this is actually 2 days worth of the 17th and the 18th. So the 17th finished kind of strong, but the 18th has just been monkeying around going sideways. So not a lot to commend it, except for the fact that it did not fail through the PSAR. So to me, a breakout above here is going to look very good. And then it has to get above the peak, and then you have an emerging dragon. So to me, it's worthwhile getting long about 429 and try to front run that move, because I think if it breaks out above 432, it explodes. New 30-day high, new 10-day high. So I want to catch it while it's just trying to leave the station. That's how I'm looking at this. So all systems go. We remember that we're in sideways quiet, which is favorable for the longer term now that we've, pulled 13 or 14% off the low. And this feels pretty good. Let me know if you found that helpful with the 150, the 30, and the 10. I'm going to keep adding that to the. As I won't go into that level of detail each time, but I wanted to establish a baseline there. Yeah, it also helps with the swing perspective as well. Gives us a little, especially if we want to hold those positions a little longer, it's going to help us, I think. All right, so here's the S&P today, was up a fraction, up 0.29 to make back the losses from yesterday that were about the same size. So it has less daily range and a micro gain, so we're just still marking time, digesting, if you will. The Russell was the best today at 0.66. The Qs were close at 0.24. Treasuries were up 0.15, closing almost at 115. Diamonds up 0.11. The big loser today was, sorry, I didn't have it on the screen. Yeah, emerging markets. So let me get that. So yeah, the Russell, the S&P, the Qs up 0.24. Treasuries, diamonds, and then the only one below the zero line. Here's the cut line between gains and losses. Was emerging markets at minus 0.6. Let's take a look at the losing sectors and targets today. These would be the ones that I'd be looking to exploit if they started to fail. So here's again our S&P benchmark at 0.29. Brazil 0.28. Here's our plus and minus line. FANGs and VIX 0.19. Lumber and finance 0.1. Consumer discretionary, wheat and precious, the Aussie dollar minus 0.03, 0.08. Mexico and blockchain minus 0.6. The big cluster of weakness here: real estate, biotech, lithium, innovation, genomics, global future of finance, and agriculture 1.5. And then this cluster between 0.7 and minus 1.28. Individual company targets: Coinbase and Robinhood down 2.4. Squarespace 0.76. So that's some of your financial disruptors right there. Financial services that are modern and hip. Coinbase, Robinhood, Squarespace. And that's why they're elements of that global future of finance. So if you wanted to play just the whole sector, that's a good one to track. Rivian, another sad day, minus 1.4. Disturbing to me, Apple, Microsoft, and Tesla all down slightly more than the S&P and tech. So this was a give back of, probably the three tech companies that have to be strong to lead us out of the further out of the pit. So we don't like that. Tesla, however, still closes above 900. $50 range stat, $5 R10. Here's Cliff Natural Resources, minus 0.11. All right, to the upside, first places I would look to see gains tomorrow if the market begins to recover on a Friday to go into the weekend. I would be surprised to see that. I would be more likely to see protecting positions and being defensive going into the weekend myself. 0.29 in the S&P again. So now we have our cluster of materials, staples, the other lumber, and Simon Property Group, which is commercial real estate, between 0.3 and 0.4. Bitcoin futures and S&P Tech 0.56. A nice strong cluster in here of clean energy, blended commodities, blended large cap crypto, Ethereum energy, and oil between 1.5% and 3%. So we called that one yesterday with the potential for the energy sector to continue to work. It did that today. Marijuana making its recovery still at 3.8. Devon Energy, oil exploration ETF, 4.37. So that's energy and oil at 3%, and then you get that extra boost from XOP at 4.3. And then Devon Energy, the single best performer, at almost 6%. When energy's good and Devon's better, that's your superstar. Not a surprise. The metals, 2 out of the 3 did real well today. Alcoa 3.6, U.S. Steel 1.25. Only Cliff which was just below the line down here, was in the negative. So 2 out of the 3 metals were okay, and U.S. Steel was my preferred target for today. And then the financial disruptor PayPal still doing pretty good. That's bucking the larger trend of the weakness that we saw earlier in the financial disruptors. All right, let's go with daily reports now. All right, sniper trade of the day today was Devon. We were ready for that one based on strength and energy yesterday, so here's how Devon closed. That turns out to be the same as the minimum manageable risk box from the R10, rounded up to 10 cents. It had a gap opening to here. It moved one risk box off the low of the day, and so I just bought it because energy was stacked up and ready to go today, and this was leading the way right out the gate. And then in the first bar, it moves 2 boxes up in the first bar. So in terms of trade management, all I look at that is an easy way to get my risk out to about there. And then as it starts monkeying around in here, I can figure out how to raise that in some sensible way. I ended up just following the PSAR and getting 2R. But that's a good problem to have. Well, I'm in the money, and the worst thing that happens to me is if I make no lose plus dinner for 2, I wonder however I shall manage my stop. That's a good problem to have. I would love to see you have that problem every day. Next, so after that first surge up and it holds, so now we get the low of the day, the higher low, the RL10 reverses. It comes out and hits. I wait for it to just hit the PSAR flip. If you wait for it to breach higher than the RL10, then this is where the emerging dragon would be looking to get in. But I get in here. It rolls over, it comes down. I take a half an hour loss. I just waited for it to hit the PSAR. I was not eager to go short the strongest stock in the strongest sector. There's other better ways that are for shorting, in my opinion. So I just wait for the support to hold, the PSAR to flip, and then it doesn't follow through, so I just take another half. So this is minus 0.5, minus 0.5. This one is plus 2. So right now we are net 1. It gives, now this feels like a SSC because we had lower lows, but it still gives me the PSAR flip. It was still the strongest stock in my stack, and energy was the strongest sector. So I just hold my nose and buy it. And again, I'm going to have my stop for execution below the RL10. In this case, it didn't fail. It just went up and gives me about another, 1.5. So net 1 and 1.5, call it net plus 2 after we pay for all the commissions and slippage and whatever. So that's about a plus 2 day on Devon, trading the 3 minutes. Strongest stock in the strongest sector with a manageable risk box. Standard work. Okay, we've seen the 3 time charts. We're still in sideways quiet. That's good for the long side. We recovered just a little bit of strength today. Got back up into overbought on the 10-day. So that's still a healthy market right there. Buying on dips, that it's in sideways quiet. Still abnormally strong on the risk Z for upside. No dead cat bounces in here on the channeling and overreaction. IBM, Coke, McDonald's, Caterpillar for the 10-day minimum pains. Walgreens, Verizon, Tesla, 3M, Pfizer. You saw the news today that Buffett basically eliminating his Verizon position and his U.S. Bancorp, which is not going to be helpful for those guys. It explains a lot now of the persistent selling. Dow 30 tactical, lots of dojis today, a couple dead cat bounce warnings in Cisco, Disney, Home Depot. Cisco had a little 10-day and 1-month breakout, a pretty nice size one. And so did IBM and Techland. Maybe I have been neglecting them. I don't know. Verizon and Walgreens were the big percent losers today. And they had new 10-day lows achieved. 1 5-day down pattern in 3M, which is a 2.2 to 1. That's in a sideways quiet with a market that might be ready to go higher. That's a nice buy on dip. So when you look at that, you say 5 days down. That means it's had 5 lower closes. Maybe it looks something like that. And if we just take the daily range and set that equal to 1R, the fact that it's 2.2 says that there's 1, 2, and a fraction on a target up to the 10-day high. So there is this little sell-off has created an investable moment in which you can get better than 2 to 1 using the daily risk. So what we'll do is set that up and wish that it opens inside its daily range. And then if it breaks out of that daily range, bang, we're on it with an initial stop of yesterday's or today's low. And then that establishes our 1R. All right? That's swing trading 1 day at a time with the auto framer. Where was it? Oh, here, 3M. Sorry. And a particular pattern. Whereas Johnson & Johnson is 2.8. It doesn't have any recognized swing trade patterns, but simply on the basis of trade location, we can frame a favorable trade, and we would trade that exactly the same way. Reward to risk ratio is itself one of our swing patterns. In the ETF tactical, 5 dojis, 1 warning in finance. Handful of reward to risks that are favorable. Gold in Europe about better than 2 to 1. Silver 2 to 1. Treasuries 3.5 to 1, and then consumer discretionary. And Tesla's a big component of that one, are firing. I see the breakouts here in oil exploration and in the energy sector. Micro breakdown here in silver and gold. So not a lot of wasn't a lot of tipping of the hands right here, if I can say it that way. But energy to me looks compelling. Auto framer, again, this just sets up our the framing data for mechanical trade framing right here in this section. That's 5 cents above today's high. Initial stop 5 cents below today's high, today's low, and then that's the 10-day high that establishes our initial target. So Treasuries, U.S. Steel, Johnson & Johnson, Cliff, and 3M, that feels good. Disney's had such a strong run that I don't mind trying to get on board at 2-1 favorable. Tesla's actually looking pretty good here at 1.7-1. Now the intraday, we use $5 in Tesla. The daily range on that one is 14, at a $14 range today. So you can see your swing risk in that one is 3 times wider than the intraday aggressive sniper. A healthy number of squeezes, not surprising given today's tight range. Treasuries, McDonald's, Pfizer, Alcoa. Microsoft, I'm going to like that one. Coca-Cola, I'm really going to like that one. Tesla's up there at pretty tightly squeezed. Tighter than the Dow and the S&P for sure. And Brazil was the least squeezish of our 4 bellwethers. A couple Godzillas here. Newmont Mining and Verizon. Both very quiet, so you're getting a chance to get them off the bottom while they're still quiet. So it means it's sold off harshly and then has been just living on the bottom. Is it ready to rage or collapse further? Well, we don't know. But whatever that move is out of that little tight compression zone is going to be large and in charge. No Godzillas in the tactical symbol set. However, a large number of fireworks for the reasons I described earlier. These are the ones that have burst way high and have consolidated. And these are actually the popcorn form of this because they are so quiet. That bright red means it's more than 1 standard deviation below the average volatility for both the 5-day and the 1-day. These barbecues, the fence sitters, these are the ones that are right in the middle of their trading range, right around the 50-yard line, and could break up or down. These fireworks and popcorns are ones that are already well off their bottom and are up near the 100, the end zone, if you will, the 100, and are ready to either collapse or further expand. And these are all in a tight range box already at the top of that resistance level. So that's what makes them interesting. The most quiet, there was nothing moving on the 1-day volatility. So quiet is as quiet does. But in the most volatiles, you're starting to see some movement already. Walgreens, AmeriCorps, I guess that is. VTR. Yeah. So those are the first movers, if you will. Standard numbers, auto framer for the tactical symbol set. This is our tactical symbol set here, the ones you see me look. These are the ones I look at all day. So I'm always ready to trade all of these. And those are the ones that you see me work through every day in terms of the performances from the previous page. It's a mix of broad indexes, regional indexes, country indexes, business sectors, and then companies that represent all of those sectors. So I can do market, sector, target, and build logic chains out of there. And most of them are, the individual stocks are like these, and then the ETFs are like those. So this splits it up. So you can see that same symbol set in terms of the MACD histogram. So these two chunks here taken collectively, I think of as my tactical symbol set, the ones that I choose to specialize in, so that I have just one page to look at to find most of my targets. And it's a very efficient way to manage many different locations inside the market when I'm looking for targets that are moving. Something on that list will move, even though they're all quiet right now. I'm just telling a lie. This is the multi-time frame NDX summary. So I'm looking at 2 days, 10 days, 30 days, 90 days, 270. And for each one of those time periods, I'm setting the highest high equal to 100 and the lowest low equal to 0 of the day before. So then when today's price action prints, we find the closing price, and then we map it to that score of 0 to 100. But sometimes today's price will close below the 0 from yesterday, and that's why you get these negative numbers. And then the size of the number tells you how far down below the previous look-back period that move went. And then similarly, these that are above 100 and brightly colored, that means it closed outside of the look-back period from yesterday. So that's how you really detect new breakouts, and then the number tells you the magnitude of it. So like on something that is minus 180 or a plus 184 like Devon Energy, if you take the size of this, if you took 84 points off that and added it to it, it's at 180. That's how far Devon broke to the upside, 184. So almost a full 10-day range of additional movement up. Whereas Walgreens at minus 190 is way down here, almost a 90 additional points below the previous 10-day low. So that gives you, at a glance, the magnitude of those breakouts. Like Squarespace just snuck over the line at minus 3, whereas Walgreens blasted through that at minus 190. That's of course, we're only talking the 2-day bar right there. But you can see Cisco at 189, that was and 359. Huge move today in Cisco. And oil exploration and energy. And here's our oil. So that's how we use at a glance to find where are the extreme conditions over those look-back periods. And then on the longer term, like the 270 and 90, you get a sense of where the weakness is and where the strength is. Market leaders and market laggards at a glance. And that gives you like a heat map of strength as you move through the different time frames on one simple chart that is very, very helpful. More stats. Enough of that. Some sniper trades today. This one you already saw, Devon. I walked us through that. That was that large move up, and then it just kept going and closed really well. So I'm expecting more movement out of that one tomorrow. It may be up. People may look at that and say, well, energy is raging back, and this was the best one, so they just want to keep buying it. Or they say, nope, that was an overreaction, so maybe it starts failing back down to the previous price level. I don't know. Either way, there's a large move available, so that's going to be tradable tomorrow. All right, this one is, let's see, Bed Bath & Beyond. We talked about that one yesterday. Yesterday, when the market was open, it was up like 15%. And then right after the market closed, a major hedge fund announced it was liquidating their entire position, which was like 11% of the float. And it just got smashed. In the aftermarket, And then we were prepared to trade this one today as a special opportunity. So here's the gap down. That's the gap. Sells off to here, recovers, comes up and then starts rolling over again, comes back inside that OR3, and it's already starting to fail. It failed to close the gap and then started getting weak. I look like I was drunk on that one. All right, so let's take a look at that first one. Here's what happened on the first one. So here was the big gap down, sold off, recovered up to here, and then it started rolling over. It moved, so I didn't see any urgency for it to try to close that gap. So it was already starting to get weak. It had moved a risk box off the high and failing, so I just get short, hold my nose. Consolidation and fail. This was, if there was ever a place to add a second position, it would be here underneath the collapsing dragon, that belly right there. That's where you put your second one if you want a second one. Now, if I had done that, the place I normally would get out would be like right here, because I don't want to let it come. I want to make the second position in the money, and this already was much lower and starting to recover. I would cash it there. Because I don't have that one on, it's a little easier for me to just stay with the original plan of following the PSAR and take the PSAR cover for about, if that's 1, that's +2. Check or hold. Okay. This is one I was not interested in getting long on, so I don't play the stop and reverse with the SSC. If I had, then the place where I end up getting short again as it violates through the PSAR, then if you get long right here, you have to get out here as it violates the PSAR. So that wouldn't have lost money, would not have made much, but I was committed to just the downside on this one. Scratch, and I think that's all I did with that one today. It just didn't feel like there was any more pain and suffering, because it was already down another 20% from the previous day. So this may end up being the new fair value of this thing's just stuck right here in the middle. So maybe tomorrow we watch for a breakout in either direction. But we got the little 2-hour opportunity trade, and that was okay. Yeah, okay. Yeah, that's all. It didn't really do anything else the rest of the day. So failure to fail further is information that may actually be of interest to you tomorrow. This one is Devon Energy. Did I already cover that one? Oh, okay, I already covered Devon. Sorry. Yeah, we've already seen Devon. So the other one today was Brazil. All right, so here was yesterday's close. Gap up. It runs up to that's the OR3. the highest high of the first bar, the lowest low of the first 3-minute bar. So it rejects this, comes down and closes here, opens here, falls through the low of the day. I considered putting the short on that one to play for a return to excellence here. Standard risk box would have been like that. I elected to wait. It came down and hit the PSAR, and so I felt stupid. So I forgive myself. I mean, I actually don't feel stupid when I'm in the trade. If I have a pattern and don't take it, don't beat yourself up about that. If you don't have a pattern but you do take it, you can beat yourself up about that. So you can have it and not use it, but if you don't have it, don't use it. You got to have a reason to get in. So this one broke through the PSAR. Here was the same standard risk box as this one. So I'm sure by the time this gets down to here, and then breaks through that again, now it's breaking through the collapsing dragon. By that time, my stop from here has to be, at least to here in order to lock in those gains. That's the no lose plus dinner for two. And then this is the tactical space. I'm giving it some room to work. But the fact that this is already lower here, there was potentially a second entry to the downside. I don't think it, yeah, it didn't take it. So that one offers, short here, 1 unit of risk, sells off, reverses with the low of the RL10, crosses the baby dragon, enters the dragon, moved about 1 risk box off the low. So I lock in 1 and gave back 1. That felt a little wasteful, to be honest. This one was a stop and reverse in here. And then that rolled over and exited here for minus 0.6. So this is plus 1. That's minus 0.6. So we're about net 0.4 right now. And then right after I get out, just before it hit the PSAR, it held. And then it came out of the dragon. So I re-entered. Standard risk. Standard risk. Gave most of it back. That was I was pretty wasteful on this one. I was up almost an R in hand, and it rolled over, and then a 1, 2, 3, and hit the PSAR to lock in just a no lose plus dinner for 2. This time I do take the stop and reverse because I see lower highs, and so this feels like a kata 2 to the downside, and my target is going to be down to here. If it falls below here, that's where I want to put a second position on. Now the PSAR is my guide. I missed the second entry. Technically I could have, this is where that, now notice how this is almost consolidating right here, the same place it consolidated, but when it breaks below, you get that next surge down to the next price level. But I'm just following the PSAR down now. Was not very aggressive on this one. Standard exit. I wouldn't be offended if you got out here. This ticked and then immediately sold off again, so I just stayed with it. And then the second time it comes up, I take that. So this is about 1, 2, 2.5. That's a stop and reverse, SSC. Standard exit, then a re-entry, because the PSAR never actually flipped. Price came through, and after that big sell-off, I didn't believe in this on the long side. So quick exit and then quick re-entry, quick exit, quick re-entry. So in each one of these, you know, it looks like, well, geez, why are you getting out and then getting right back in? I mean, you're losing. I'm giving back that little piece because, you know, you're here, and now I lock in that piece, and then I miss that move, and then I get back in. So I'm actually losing that little piece. But yeah, but you don't know that it's not going to come to here, and if it breaks below here, this thing's going to collapse. So you're protecting against that downside move. But then because it doesn't fail, surge up. That one pays nicely. Pretty good day at work. All right, let's take a look at the traders. Devon. Now, the difference in our trades was whereas I played the wrist box off the low and was getting in around here, he gets a scratch, waits for this to fail through, takes the 1 hour loss, stop and reverse, gives back almost 1 hour to lose a fraction, and then a couple micro losses there. So yeah, after that initial burst, it just kind of didn't really do anything. Tesla was a hard one to trade today. It really didn't move much, and he got chopped up a little bit inside here, but he did get the two moves that were there. He got, but he got, nibbled away a little bit. But again, it was a small range day today. He's 3.3 here, though, on the Aussie. I love that short because it's the PSAR flip. He waits a while to get out, and then a little slow getting in. We let it come all the way back. So I feel like we could have scratched both of those, and that's minus 1.4 of sticking around to give it a little more room, to believe in it a little longer. I don't like that. Don't believe in it. But really nice stop and reverse. Nice stop and reverse. Nice stop and reverse. Crushed it for 3.3. Really good work there. This is Arch. This is also the 5-minute Aussie. And he gets paid today. Good job. I like this one because he doesn't want to let it get away. I might have tried the re-entry and probably scratched it anyway. This one, hard to get out of that trade any faster. That's a good exit. I like that short. When it comes here and starts failing, every reason to believe it could do that just like it did here. Unfortunately, we got to pick better times to be out of the office. But I like that short. That's a good stop and reverse quick scratch. This was a little slow getting in, but you did get in. And then this is where, gosh, with normal play, that's a big win for you in the usual way. That PSR flip is a huge win. And this second leg down, you'd have been really tempted to put a second position and then exit it on the near side of the dragon. If you have two positions on, exit at the edge of the dragon. Don't wait to give back that extra piece on two positions. This would have been your standard entry on the long side. You would have gotten all of that using the PSR. But that's really good work. And bringing home the bacon. So nice job. I just saw that one too. That's a good one too. All right, that's everything we got for today. We'll get this published and posted and be ready tomorrow.